Hi, this is Scott Martindale with Sabrient Systems with this week's Sector Detector column. You know, I was watching the ABC Evening News, World News the other night, and I was struck by the commercials they were running and the demographic they were targeting. It seems that the advertised products addressed at least 6 age-related ailments, and all of them pointed to some healthcare product that could help with those ailments. So no doubt the healthcare sector is poised to profit from an aging population, with or without Obamacare. And in fact, the iShares U.S. Healthcare Sector ETF, the IYH, has been a leader this year, up 13% since the beginning of the year. And yet that still trails, just as a side note, still trails Sabrient's Baker's Dozen diversified portfolio of 13 stocks, which is up 16% so far this year. Last year's portfolio was up 43%. And if you want to see the full list and current performance, just go to the Sabrient website. On Thursday, the Dow finished positive for the 10th straight day. It's the longest streak in over 2 years. Last week, it gave a historically predictive Dow theory buy signal, and that's when the Dow Jones Industrial Average hit an all-time high to confirm the earlier one that had already been made by the Dow Transportation Index. Still, many market commentators are getting queasy at these heights, especially given this unrelenting uptrend we've seen. Some believe the market's been driven solely by the Fed's monetary policies and quant easing. And there's no doubt that the bull that commenced in March of 2009 has largely been driven by the Fed's monetary stimulus. But it now appears that we are entering a period of economic expansion. Stock valuations are still reasonable. There is substantial risk premium in equities versus bonds. Consumer confidence is still relatively muted with room to grow. The economy is improving though, and companies are hiring, as we've seen in some of the recent employment reports. Corporations have been beating their earnings estimates this season. Sideline cash is plentiful. M&A activity and stock buybacks is vibrant. Consumer spending is strong despite stagnant wage growth and the recent increase in the payroll tax and high gasoline prices. We saw good retail sales come out. Also, there appears to be a visible rotation from bonds into equities as bonds have seen their correlations with equities fall below 60%. So these good employment reports have provided this most recent catalyst, driving stocks higher. Now that final frontier is the all-time closing high on the S&P 500, which is just a couple of points above at 1565, and then the intraday high at 1576. And beyond that, there's just clear blue skies for the S&P, and only the NASDAQ still has some historical resistance that it would have to deal with. So it's all very positive. Technical picture is very positive. Price, from a technical standpoint, price is back inside the narrow rising channel that has been in place since the beginning of the year with only that temporary violation to the downside. Just looking at Sabrient SectorCast, fundamental-based rankings, quantitative rankings of the 10 U.S. sector iShares, we see technology, IYW, continuing to be at the top with a score of 92. Anything above 90 is very good. Financial remains in second place with a 68. The IYW, financial is IYF, by the way. IYW is strong across the board with low forward PE, solid and growing support from Wall Street analysts, strong projected long-term growth, and the best return ratios. IYF displays a low forward PE as well and solid support from Wall Street, and it has reasonable projected long-term growth. So financials is still up there as well. At the bottom, we see telecom and consumer services again. Although the IYC, the retailers, consumer services, they're expected to have the highest long-term growth rate, but it's hindered by a high forward PE. Already, in other words, a lot of it's already priced in. Encouragingly, the industrials, IYJ, has risen to fourth place while utilities has fallen. So overall, I would say that the rankings are still show a bullish bias. Looking at the bull scores, the top to bottom spread between energy and telecom is only 8 points, so that really continues to indicate high correlation. In other words, all boats being lifted on strong days, and that basically corroborates that 85% average sector correlation to the market that Convergex has reported in their monthly review of price correlations. Thought that'd be interesting. Top-ranked stocks within technology and financials. I'm looking at VMware, CACI International, Allied World Insurance Company, and BlackRock. Thanks for listening.